So absolutely everyone knows and is talking about the fact that Warren Buffett sold literally billions of dollars of stock the day before Japan saw their worst day on the stock market in literally 50 years. But I haven't seen anyone come up with a plausible explanation for why Warren Buffett right now is literally sitting on $277 billion worth of cash and short-term treasury equivalents, making him a bigger holder of US treasuries than the Federal Reserve themselves. I know it's shocking, but if you're an investor or if you have a 401k, you're going to want to stick around and watch the full video that I have planned for you guys today, because we're going to try and make sense of why Warren Buffett timed his sell when he did. So we're going to begin this story by playing this video right here.
Out of big cap technology, Apple shares continuing to slide following Warren Buffett and Berkshire Hathaway slashing its Apple stake by about half. Tom Forte, Maxim Group senior consumer internet analyst, joins us now. Tom recently raised his price target on Apple to 203 from 195. Keeps a hold rating on the name. Tom, great to have you with us.
Thank you for having me, Melissa.
What do you make of? I mean, some people just say it's just risk management, and it may very well be. But Buffett really has sold well. I mean, he sold according to the filing during the big run up in Apple shares, and he also was selling Bank of America, which I know you don't cover, but altogether he's selling pretty well. So how do you take this sort of signal if it is?
Yeah, so I do think it's a signal. So if you look at shares of Apple, they're trading at about a 30 times multiple on the out year from a PE standpoint. And what does success look like on an AI upgrade cycle? Success looks like mid-single digit to high single digit.
Okay, so these guys are claiming that Apple is overvalued. These guys are also claiming that Warren Buffett actually sold well. We're going to explore whether that may or may not be true at the end of today's video when we actually analyze Warren's track record. But I did want to show you guys the chart of Apple because I think it's a pretty interesting chart. If you bear with me, just while I get my my house in order, so to say, we can see here, this is the chart of Apple. You will be able to notice some pretty interesting things about the chart of Apple. It has gone pretty much straight up and to the right for a very, very long time. And a lot of people have praised Warren Buffett, okay? They've said, he's getting out at the top. He's rode the wave of Apple. He's been very successful. But again, I would just like to remind you guys, Warren Buffett didn't buy any of these early technology companies that have become monopolies today early in the 2010s, okay? He didn't buy Amazon, he didn't buy Apple early, he didn't buy Google early. He was actually too scared to buy all of these things because he simply did not understand new and emerging technologies, okay? I'd always like to remind people of that. But Warren eventually got on board with Apple and he sold it pretty big recently. Very, very big recently. How big do you ask? Well, let's have a look at this article here. Buffett calls the top. This is what Zero Hedge is saying. Berkshire Hathaway quietly dumps half of its Apple shares amid unprecedented selling spree. I love that title. You guys know I'm a sucker for a title. Well, you can see here, big old Warren sold $88 billion worth of cash in Q1 and Q2 of this year. So I actually wanted to show you this chart because I could have swore I tweeted it out earlier today, but you guys can see the chart. This is the net position of Berkshire Hathaway. So if you're looking at a green bar on this little chart here, that's showing that, Berkshire Hathaway is deploying capital and they're buying, okay? And red bars signify that they are selling. And you guys can see a pretty clear trend here, okay? It's not rocket science. We can see that Berkshire has been selling big, really, really, really big. They bought big in March 2022 with that big green dildo bar. And we could see that they've begun selling in 2023 and 2024 in a really, really, really big way. Okay, so some people are saying that maybe he's called the top. Maybe he knows what's going on. Something interesting before we talk more about Buffett is he's not the only big name who sold a lot of stock recently. The CEO of Nvidia, one of the highest flying stocks in the entire world right now, well, he's also sold some stock. I found this article and I found it, I don't think amusing is the right word. I found it interesting. But we can see here, Nvidia CEO to Warren Buffett, insider stock selling was an ominous warning ahead of the market swoon. Okay, again, for those who may not have I'm sure everyone knows what's happened this week, but the market swoon, that's a new word I don't know about, but the market swoon Zero Hedge is talking about is this bloodbath right here. 3.8 trillion has now been wiped from the stock and crypto markets within the last week. This crash is now ranked the largest destruction of wealth in history. Okay, let's add some context to that very inflammatory statement, because obviously the reason why this crash right now is bigger than 1929 is because the numbers are just simply bigger. Today, equities have a market cap of 50 to 100 trillion, depending upon what indices you're looking at. Again, think about how large the indices were in the 1929 when we were using the not so hyperinflated and devalued US dollar. That was obviously a lot smaller. So again, I would like to remind you guys that title is probably a little bit off from Zero Hedge here. I don't think it's the biggest crash in history or since 1929, because if you just look at the crash on a percentage basis, we really haven't seen one. And we've actually seen a massive rip back rally today, a snapback rally. This chart doesn't really paint the picture of a snapback rally, but this chart here is the chart of the NASDAQ. So again, I want to put things into perspective for you guys. If we have a look, let's do a little bit of drawing. You guys know I love a little bit of drawing. So the crash from peak to trough was 15%. Right now, the NASDAQ is only down from its peak by 12%. Okay, so it's had a little bounce today. Okay, it's had a little bounce. But again, I don't think this correction is, again, it's warning signs. Like we showed you in the live stream earlier this week. It's warning signs. Pay close attention. But we saw a 38% correction in 2022. People thought that was the end. In 2022, when the NASDAQ was down 35% and many technology stocks were down 80%, everyone was like, this is the end. 1929's coming. 2008 is coming. It's all over. Pack it up, boys. Everybody was saying that. All of your doomers and your gloomers and your boomers, those measuring the stock markets in US dollars were like, oh, this is just the beginning of the massive crash. Okay. But again, that didn't happen. Why not? It was because they started pumping liquidity into the markets in October 2022. That's when they started draining the TGA and they started pumping money from the reverse repo market into the market. And that's when Janet Yellen started her form of stealth QE. Okay. Again, that's the biggest thing most people are missing right now. They're paying all of this attention to the Fed. They're saying, oh, the Fed's about to cut interest rates. This is typically very bearish for the stock markets. Look out. This is the beginning of the crash. That's what most people are saying, okay? But I think, again, I don't know what's going to happen, but I think some context that is missed amongst these people is they fail to recognize that now we're in a different era. We're in the biggest bond bear market in 80 years. We're at the end of this 80-year long-term debt cycle. We're watching sovereign debt become an asset that nobody wants to hold. And we're in this era where the US government is stimulating the economy, okay? Everybody has heard about this, fiscally driven economy or fiscally driven stimulus. That's all because Janet Yellen is pumping money out the wazoo into the economy, okay? Again, the government was less of a variable in this equation of liquidity and how liquidity interacts in markets when, the US government was, let's say, only running $500 billion deficits per year like they were before 2020. But now the government's running multi-trillion dollar deficits every single year. I think since Biden's been in office, they've accumulated about $7 or $8 trillion worth of debt. Obviously, that is all getting pumped into the market. It's liquidity. Okay, so I think right now, this fiscally driven economy that we are experiencing is actually overpowering what the Fed is doing. Everybody's saying, oh, but look at the Fed. Interest rates are at 5.5%. Money's tight. They're doing QT. There's no way markets could pump. 1929 is about to happen again. But again, I think we got to really pay attention to what is actually happening in the, the Janet Yellen side of this equation. Something else I always remind you guys of, I'm sick of sounding like a broken record, is that I firmly, again, I don't have strong beliefs. I have pretty loose beliefs, to be honest with you guys, and that they change often. Oh, they change a little bit. To be honest, they don't change that much, but they are open to change. My beliefs are open to change. But my belief since 2020, since I've been talking shit online, has been that stocks have already crashed. And that is what this chart here is going to look at. So when you actually denominate stocks by the expanding US money supply, and you account for the fact that the dollar's been debased enormously, and we've had 40% of all of the dollars in history added to the US money supply since 2020, you can actually see stocks aren't performing as well as you might think. When you account for this money supply, I've been banging the drum about this for 4 years now, and I've claimed that stocks have already crashed. Okay, this is the chart of the S&P 500, and it looks as if it peaked in 2000. What's going on here? It's down 23% from its 2000 all-time high, and that is because we've been living in this QE infinity era post 2008. Okay, because when you actually look at the SPY denominated by just dollars, this is how everybody's looking at the SPY. They're like, oh my God, look at this thing. It's going to the moon. Stocks are the best performing asset in history. Stocks are up by 250% since the year 2000 in the past 24 years. You'd have to be an idiot to not invest in the stock market, but people do not remember, or they don't account for the fact that the dollar's just been debased. Okay, so again, I think stocks have already crashed. Again, can you get an 80% crash in the stock market nominally? So can the S&P crash by 80%? It can. Sure, it can. It's not a 0% probability. Nothing is a 0% probability. I just think it's unlikely. I just think that the stock market will crash in real terms. So measured against goods and services. Okay, if you actually measure the same stock market and you denominate that, you denominate it by Bitcoin, you can already see that the stock market has already crashed. Okay, so it all depends upon, what is your denominator. Okay, again, always ask the doomers and the boomers and the gloomers. Okay, righto, you're calling for an 80% crash, but what's your denominator? Like, what if you measure it in gold? It's already crashed. Or the money supply. Use the money supply. That's one that it's hard to argue against. But this is stock market price in Bitcoin. Boy, just have a look at that puppy. Since 2014, that's down 99.06%. Okay, so again, that's a little bit of a tangent. I think it was a tangent worth saying though, because everybody's saying what we're seeing right now, it's just the beginning. We're going to see more. We're going to see this enormous crash. Again, we could. I don't think it's my base case. Give it a 5% probability that we do get a 50% drawdown. I'm not saying it's zero. I'm giving it a 5% chance. I understand the yield curve has been right a lot of times in the past 100 years. Hasn't been perfect. Okay, there have been 3 times the yield curve has inverted and we haven't gotten a recession. It inverted 2 years ago. A lot of people are saying, look, this is the recession. This is the beginning of the recession. I'm not so sure. I'm not sold on it. I think, again, we're in the biggest bond bear market since 1860. I think people aren't quite factoring that into their equations. Okay, speaking of equations, we have a ton of comments. I'm going to circle back and answer a lot of the comments at the end of today's video. I might even do the comments shortly. I want to first kind of explain what's going on in the markets. So we can see here, volatility has absolutely exploded in the past week. It's up big. Okay, it's up really, really big. Okay, this is what everybody's talking about. Japan had its worst 2-day stretch since 1987, Black Monday. Taiwan, the stock market in Taiwan was like halted when they opened trading on the weekend. The South Korean stock market was also halted on Monday when it opened. This here is the chart of the Taiwan Semiconductor Manufacturing Index. So Taiwan is famous for the production of semiconductor chips. So I like this. This is a good proxy for what Taiwanese equities are doing. And we can see this puppy down 31%. Whoa, in a week. That's a big move. That's a big move. But again, it's had a big bounce. If you put this thing on maybe like daily, you guys can see all the markets have bounced back so hard today. Really, really hard. Big time. Big bounce. Okay. If I know I have a tweet that I want to show you, or I saw earlier today that I was just, again, you guys know that Twitter is my go-to Google place, so to say, for research, because I love Twitter. There's a bunch of really, really great minds on Twitter. And I remember seeing a really good tweet of TXMC. Here it is. TXMC is one of my favorite Bitcoiners. We don't see eye to eye on everything. We have actually polar opposite views on where we think the markets are going to go. But I love following TXMC. You guys should follow him too, because he's a great analyst. He says here, Nikkei had its worst day of all time, followed by its best day since the global financial crisis. What an incredible shit show price action. Okay, so again, we've been saying this for a while here on the channel. Go long volatility. Again, I don't know what's going to happen, but all I know is that all of these models are going to be broken in the 2020s. All of your volatility models for equities, all of your volatility models for the bond market. Okay, they were already broken. Bonds just had their worst bear market since 1860. Okay, it's not a hyperbole statement to say all of these models about the bonds and the 60-40 portfolio, they're already broken. They broke in 2020. And all of these models about Bitcoin, they're also going to break. They're all going to break in a pretty big way. But we're not gonna pee on the parade of the power law lovers just yet. Might say that for later. But I found this really interesting about Warren Buffett and Japan. So again, we talked about this earlier in the week, so we're not going to rehash it. The reason why we're seeing so much chaos in Southeast Asia and why Japan is melting down, it's because the $20 trillion carry trade is unwinding. Okay, so what does that mean? Well, a lot of people have been borrowing in Japanese yen, and they've been using those borrowed dollars to go out there and buy equities. Okay, and there's apparently $20 trillion tied up in this trade. And the reason why this trade was so popular was because the Japanese yen had such low interest rates for such a long time. Okay, and it was this week when the Japanese central bank did this, they raised interest rates very mildly and very small. This is when the trade started to unwind, because now that debt is not so cheap in Japan, a lot of people are going to start unwinding their trades. Okay, now, I'm not going to get super deep into the carry trade because we talked a lot more about it in the live stream earlier in the week. But you guys can see, I always like context and giving you guys visual comparisons of things with charts. That's why we do look at so many freaking charts on these live streams. You guys can see in the red here, that's the Japanese central bank interest rate, policy rate. Look at how low it is compared to the US, UK, and Eurozone rates, which are all between, let's say, 4.5% and 5.5%. Japan's still basically at zero. Okay, so I mean, this could just be the beginning of the carry trade unwinding. Okay, if I were to put on my bearish cap, so to say, I mean, look, Japan could raise interest rates a little bit higher. Again, I don't think they're going to get them to 2% or 3% because the government of Japan has over 270% debt to GDP levels. Massive, huge debt to GDP levels, okay? America, for context, has about 130%, 125%. So that's why they've got higher rates. Again, so I don't think Japan can raise rates as high as these other Western countries, but just something to be cognizant of. They are so low right now. They're like 0.1%. So they can raise them a little bit more, potentially, before they bankrupt their government. But again, this is what I want to talk about here. I found this tweet fascinating. Anyone want to check up on Buffett today? Berkshire Hathaway was issuing Japanese yen denominated bonds and buying Japanese equities for the last few years. Wonder how that position is going, or if he is short covering his short yen position by selling his long Japanese equities. Okay, so again, Japanese equities are dumping. Warren Buffett is dumping record amount of stock. I found that interesting, so I did some more digging. I found this article right here. Apparently, Warren Buffett has been betting pretty big on Japanese equities. Warren Buffett is betting big, increases his stakes in 5 trading firms. This is a recent article. This is June 2023. You guys can see the date. This is in Forbes. And we can see here that Hathaway has increased its stake in 5 Japanese trading firms to 8.5%, with more increases possible. It's interesting. Very, very interesting. So he's been investing some money into Japan for a little while now. And I think that is interesting, okay? Just because obviously when the Nikkei is doing things like it's doing, I'm going to show you guys the chart again of the Nikkei. Oh, it looks like an altcoin. Have a look at the chart of the Nikkei. So this is the stock market for the whole country of Japan. A G7 country, mind you, are they a multi-trillion-dollar economy? Let me double check that. I know you guys don't like my, I get called out for my maths on the fly sometimes. So let me have a look at let me fact check myself here. Japanese economy, GDP. Let's check it. Oh, okay. Okay, they are multi-trillion. They're 4.3 trillion. They're a big puppy, okay? So Japan is massive. And for their stock market to be doing this, trading like a shitcoin, this is consequential. This is big. They got a $4 trillion economy. Let's zoom out again. Again, context. Let's have a look at context. This is a 7-year chart going back to 2017. So again, you can make the argument here. I'm not a TA guru. We don't talk about TA here on the channel. TA is mostly astrology for man. But you can make an argument that this is just, it's just stair-stepping higher. Breaks out, comes back. Breaks out, comes back. Breaks out. Maybe it's just coming back before it goes up higher. Right now, that trend isn't screaming bearish. That weekly candle is screaming, look out below. It's screaming, something's happening here. But again, in the broader trend change, we haven't seen anything absolutely go wild yet. Okay, yes, we're seeing credit spreads widen. We're going to talk about that soon. But again, these are warning signs. The Nikkei is down 28.54% right now. It's a big move, okay, considering the size of their equity market. So considering this, keep an eye on what Warren Buffett is doing. Keep an eye on what Japan is doing. Now, I love this question here. I think this question is a really good one. TA works best when the market is stable. That's true. This is why I believe TA is astrology for man and why all of your TA analysts are going to get wrecked in the 2020s because we're in a fundamentally different era than we were in between, between 1945 and 2010. When we were in the leveraging phase of the long-term debt cycle and when interest rates were just continually lowered from 1980 to 2008 when they reached zero. We're in a completely different era. Your TA could have worked a bit better. Now we're in the deleveraging phase of the long-term debt cycle. This is when things get interesting. Sean Seen, depending upon how you pronounce it, makes a great comment. Japanese, you get carry trades just getting started. Big deals are coming. Just don't get liquidated. It's always good advice. Don't get liquidated. Don't trade with leverage. Okay, why are you trading with leverage? You shouldn't be trading with leverage. You really shouldn't be. Don't have your money in stock brokerage platforms. It's a bad idea. Actually, I'm going to answer some more questions in a moment, but something you should do is you should be self-custodying your Bitcoin, okay? If you're not, what are you doing? Again, I always recommend you guys to get your hands on some Bitcoin-only hardware wallets. I don't have them on me. I normally have them within arm's reach, but I don't have my hardware wallets on me. What I do have in front of me, though, is a surprise. I'm going to run away from the camera to show you a surprise. I promise it'll be worth it. I'm going to come back. I won't be gone too long, but if you got your Bitcoin on a hardware wallet, something I always encourage you guys to do is to take the next step, okay? Most people think they're sovereign by having Bitcoin on a hardware wallet, but they have their Bitcoin backup words written down on paper, okay? I don't think that is the go, okay? I don't think you should be doing that. I think you should actually be putting them on titanium. So that is real titanium in my hands. I finally got one of these beautiful titanium plates that have arrived to me from Stampseed. As you can see, can you hear that? I'm not sure if my microphone picks it up or not, but that's real. That's titanium. That puppy is literally going to survive everything life throws at it. So again, I always encourage you guys, get yourself anything from Stampseed. Get whatever you want, but I recommend the titanium plates. They survive fire, as you can see. They survive floods. They survive absolutely everything. And if you're going to take that first step of, getting your Bitcoin off an exchange and putting it on a hardware wallet, what are you doing? We're writing down your backup phrase to your generational wealth on paper. Terrible idea. Most people store their hardware wallet and their backup phrase for their hardware wallet in the same house. It's rare that people go the extra mile, okay? I know a lot of Bitcoiners. I don't like to dox anyone, but I know it's difficult to separate things. So if you have a house fire and your Bitcoin hardware wallet and your backup to your Bitcoin hardware wallet are in the same house, guess what? Adios, ciao, hasta luego. All of that Bitcoin is gone, okay? Unrecoverable. So again, if you're going to store your Bitcoin hardware wallet and your Bitcoin backup to your hardware wallet in the same house, not the best practice. I don't recommend it. I know a lot of people do it. At least get your hands on some titanium. So again, I always recommend you guys check out everything Stampseed is doing. You guys can get 15% off absolutely anything you want to buy from Stampseed. I know a lot of you guys have already grabbed kits from Stampseed in the month that we've been working together. So I encourage all of you, go and get your Bitcoin backed up on titanium. Okay, you get 15% off with promo code Luke15. All of that is linked down below in the description of today's video. Now, let's move on. So we're talking about generational wealth. Now, we're talking about Buffett. Is he about to lose his generational wealth by betting on Japanese equities that are, as we speak, literally down 30% this week? Well, let's have a look, because let's talk about Buffett. Does Buffett know something that the rest of us don't? Let's answer the question of today's video. Well, to answer that question, I want to talk about Warren's track record a little bit. So Warren was sitting on a lot of cash before 2020. Most of you guys would know that, okay? So we can see this article here. Buffett's chance for a blockbuster deal faded when the Fed stepped in. So this is obviously referencing 2020. And if you look at Warren's historic cash pile, if you really try to squint, so to say, maybe my mouse is going to help you hover over where I'm trying to draw your attention to. But Berkshire Hathaway's cash balance was sitting at about 150 billion, not trillion, 150 billion in 2020. And it had risen from 30 billion in 2008 to 150 billion in those 12 years between 2008 to 2020. So Warren was stockpiling a lot of cash between 2008 and 2020. Again, his cash balance for Berkshire Hathaway increased by 5x. It's a pretty big increase, don't you think? Well, he lost a lot of money by doing that. Again, let's just think about it. He thought we were in this global depression, and we were. We have been in a global depression between 2008 and today, 2024. If you look at real GDP growth, which actually accounts for a real inflation rate, not the manipulated government CPI inflation rate, we've been in a global depression since then. We haven't actually been growing at the same trend that we were growing at before 2008. We're growing like, let's say this. Let's try to get this little arm in the picture here. Now we're growing like this. We're actually going down if you look at real GDP growth. So Warren was waiting for this massive buy. His cash balance was increasing all the way up to 2020. And why didn't he deploy in 2020? Well, right here, he's talked about it very openly that the Federal Reserve kind of stopped his opportunity. Berkshire has yet to find opportunities during the crisis, Buffett says. So he believes stocks, even after they crashed 30% in 2020, were still overinflated. And he didn't have time to buy because the Fed stepped in and started pumping liquidity into the market. Another Forbes article. Buffett explains why he didn't do a big deal during the pandemic crisis. Buffett pointed out that the US response to the pandemic was managed very well. Importantly, though, it didn't have to be. He saw a critical point as the intervention of the Fed on March 23rd, 2020. So before that, companies were starting to pick up the phone and call Berkshire Hathaway for help. Again, they hold more treasuries than the Federal Reserve. Berkshire has a lot of money. It's not a surprise that companies would call them for help or call them for a bailout. But after the Fed's actions, help wasn't needed. Okay, so he's annoyed that after the Fed printed trillions and trillions of dollars in 2020, nobody wanted to call Uncle Warren for a bailout. Okay, so again, context. Warren missed all of the best performing technology companies in the early 2010s. He bought Apple very late after it had gone on a pretty big rally. Yes, he's made some money off Apple in the past 5 or 10 years, but he missed a lot of the gains. A lot of the gains that Michael Saylor made, okay? He wrote a book in 2010 saying, go long the mobile wave. Go long Apple, Google, Microsoft. So again, Warren doesn't quite understand technology. But to the flip side of that, and maybe to add some credence behind why Warren should be watched is, I mean, come on. He's known as the best investor of all time. Right now, he holds more treasuries than the Fed. I heard that. Let me find a receipt for that. But if you think someone that holds more, treasuries than the Fed isn't connected, I don't know. I don't know what to tell you. Let me fact check myself live on air again. Okay, so it was true. I'm sorry, I didn't get time to pull up a receipt for this one, but you guys can see it pretty clearly. Warren Buffett's Berkshire Hathaway holds more US Treasury bills than the Federal Reserve. Okay. And it looks as if you've got multiple different websites all corroborating. I'm not going to try to say new words on live streams, but multiple websites are backing that up. Berkshire Hathaway has 234.6 billion worth of US Treasury bills. That's more than the Federal Reserve. Okay, so Buffett is big. Buffett is, he has a lot of money. Okay, he is well connected. If you don't think that he is getting if you don't think he's getting a call from the Fed, actually saying, what's going on here? We think we're going to raise interest rates soon, or we're going to, cut interest rates soon. I think Warren's going to be the first person to get the call. Sorry, I'm a little bit distracted. I had to call an Uber. I just realized Pam and I are late. We're going to go grab dinner with some friends here in Colombia. So I had to get that Uber called. But again, I think Warren is extraordinarily well connected. And I think he's going to be getting a call. Okay? Let's answer some questions. Because the questions about Warren in here are fascinating. Okay, oh, look at that. That's actually the quickest Uber we've had in a while here. 10-minute Uber. 10 minutes. Not bad. We're actually living right up in the hills here in Colombia. So the Ubers don't like to come to us. And we're living in this big residential. So the Ubers hate to come to us. That's why I'm surprised we got one in 10 minutes. It's actually quick. Who believes Buffett called the top and didn't have insider information? Okay, so I didn't actually see your comment before I just went on that rant. But RB, I think you're smack bang on the money. BTC is my largest holding, says All Night Harder, which isn't saying much. But as a contractor, I'm also confident in real estate. But investing is always very personal. Agreed. That's interesting. Anecdotal evidence there by Rob. All Night Harder says that Buffett is essentially the definition of insider information. I tend to agree with that. And this is the beautiful thing and why Bitcoin is so contrasted and different to traditional equities. McLovin makes a great point here. I never cared for the stock market. Too much insider shenanigans. I love how BTC protocol is locked in and nobody can mess with it. It's a beautiful thing. Bitcoin really is a beautiful thing. Rob wants to hear more about Argentina, Colombia, and El Salvador are still going to get fallout from World War III. Yeah, I'm not so sure. I think, I'm living in South America for a lot of different reasons. I'm in Colombia right now. I'm not necessarily living here because I'm scared of World War III, but I'm not going to lie and say it's not a contributing factor. Like if you look at the countries that would be least affected in nuclear war, Argentina is one of the highest ones. They're so far away from everywhere. They're so far away from Russia, from China, from America. They're like well out of the splash zone. So again, I love Argentina. I love Colombia. For different reasons, not just because of their geographical differences. If you want to learn more about nomading and, all of the reasons why you should become a nomad, even, strange conspiracy theorist reasons like that. Again, I talk about all of that and more on the Two Digital Nomads YouTube channel that Pam and I have. Again, if you missed it, we actually did a little bit of a travel vlog of how we survived BTC Prague and how we survived Prague, which I think is a really underrated digital nomad hotspot. So we're probably going to link that in the chat. And as you can see, it's on screen. As you can see, we got swamped in a mosh pit in Prague when we were trying to do some street interviews with my fellow Luke in the Bitcoin space. It's pretty crazy. We nearly got shot at an airport. It's another story. I need to be careful with what I say here. I'm not sure I'm allowed to say that on a live stream, but go watch the video. It was crazy things happen in Prague. We're only there for 7 days. And all we can say is the Czech Republic it's an interesting place. McLovin, geez, this guy's spitting fire. We need to make McLovin a moderator. Actually, producer Pam, let's make that happen. McLovin says, this is exactly what you get when the real money is not in the hands of the private sector where it belongs. Never-ending manipulation and turmoil. Exactly right. Exactly right. This is why we need to separate money from state. Okay. Again, the first thing you can do to separate money from state and, rip the control of money out of the hands of the bureaucrats and the Satanists and the globalists is go and self-custody Bitcoin. Go get a hardware wallet. There's a ton of great ones. I know I've got an affiliate link for Bitbox that gets you like $5 off. So that'll be linked down below as well. But any Bitcoin only hardware wallet's great. Go get yourself one of these big filthy hammers. Look at this thing. I feel like Thor when I'm holding it. This is a stamp seed hammer. Go stamp your Bitcoin seed words into some titanium. And that's how you begin actually separating money from state, taking self-sovereignty of your own money, becoming your own bank, okay? That's where it all begins. Hardware wallets and titanium. Bitcoin Maxi Pad, I love that name. He's on Twitter. Shout out to our Twitter followers, or Twitter viewers, I should say, sorry. I agree with TA Astrology boys are out of whack. Yeah, I agree. I'm not saying it never works, but I'm saying how do you prove it is working? That's the real question. Maybe BTC MaxiPad is using some sarcasm. I'm not sure. I certainly don't recommend buying the ETF just for clarity. Anyone tuning in and looking at the comments, it's not cheaper. Certainly not cheaper to buy the Bitcoin ETF. Definitely not. Because you don't own any Bitcoin. So how can it be cheaper to buy a Bitcoin ETF if you don't actually own it? You can't compare apples with oranges. Okay, they're not the same thing. It's not cheaper to buy the Bitcoin ETF. That hinders mass adoption. Blee, that's a good question. Hello from Bali. I'm headed to Bali in January. Haven't been there yet, believe it or not, as an Australian. Bali's a very popular hotspot, vacation hotspot for Australians. Never been there. Hi from Bali. How do you get metal for an airport? Ask Willy Woo. Oh, interesting. I don't know if there's a hidden story in that comment. I don't know, but that's I personally have traveled with steel plates a lot. I've had my Bitcoin stamped on stainless steel for a long time. I didn't know that actually wasn't the safest thing until I met the guys at Stampseed, and I was informed that actually titanium's better. So again, you can travel with this stuff, titanium and hammers. Maybe don't put this in your carry-on bag though. I don't reckon they're gonna let you walk on a plane with one of these puppies, Thor's hammer, that you can get from Stampseed. I don't think there's too many failure points with self-custody. Again, I don't like to argue with the comments, but I'm always going to answer every comment. I love answering the comments when people call me out. They're honestly my favorite ones. You guys get to see me flake on a live stream. Go to water, so to say. That's what we say in Australia. Go to water. But I disagree with this comment. I don't think there's too many failure points with self-custody. I think it's dangerous to let someone else custody your Bitcoin. We learned this in 2022 when FTX, a $60 billion empire, went under. A lot of people trust in FTX. They thought, hey, that FTX logo it's out there on the shirts of the NBA players and all these baseball players. It's got to be safe and regulated, right? Sam Bankman-Fried's, the largest contributor to the Democratic government's political campaigns. They have to be safe and regulated, right? No. FTX creditors still don't have their money because they trusted someone else with their Bitcoin. Same went with BlockFi and Celsius. They were more obvious yield-generating scams. But I think there's far too many failure points with exchanges, personally. It's a great comment here by XX. Buffett could buy half of all the Bitcoin with his cash position right now. Buffett drinks too much Coke. Bill Pickford, my favorite Bitcoiners in the chat. Welcome, Bill. So I would actually encourage everyone to go and create their own Bitcoin backup phrases. You can roll your own dice. You can do it with Jade and Passport. I personally did it with Cold Card. I haven't done it with Passport and Jade yet, but you can also do that with a Cold Card. All night hard is right. I haven't had any issues with traveling with steel plates or titanium plates. Stamp everything. Make your property known. All night harder. All right, I've nearly made it through all of the comments. I apologize for taking so long, guys. I don't know how many comments there is, but there's a ton of comments. There's 712 of you guys in the live stream. Thank you so much, everyone who joined. If you enjoyed this video, destroy the like button, as the kids say. I'm not a kid anymore. I'm actually pretty old, to be honest. Most of you guys can probably tell that I'm getting on. Pam tells me I'm getting on too. But anyway, that's what the young kids say. Smash the like button if you enjoyed it. We appreciate all of that. If you want to check out some more nomading content, check out the nomading stuff. And with all that said, guys, I'm going to encourage you once again,